Uber is preparing for one of the biggest IPOs ever made by a tech company, arguably ever at all. It hasn't been the smoothest of journeys. There have been allegations of sexism from the company to the exodus of top management. So is the ride-hailing firm a bargain or a dodgy deal? Well, so I've used my app. I've called up my Uber. Now let's take a look under the hood, as the Americans say, or the bonnet, as I would put it. So the first thing we need to note, of course, is what exactly is there. There is the issue of slower growth. Now, there'll be flat revenues over the past 3 quarters, and that slow growth, you have to ask, is it systemic or is it somehow cyclical? Then you get a truly horrific number, $1.8 billion a year it lost. And that's an unprecedented sum to be admitting that you've actually lost the best part of $2 billion before you get into an IPO. And then you have this wonderful little quote in the document: we may not achieve profitability. Now, when you read it, the strict constructional definition would suggest it's never going to make a profit. Well, Uber admits it may never make a bean. And it says expenses will increase significantly. Cole Smead is the managing director at Smead Capital Management. As I look at this, it is not exactly a ringing indication of why I should invest my money in this company. So what am I missing?
What you're missing is everything about the environment of today in U.S. equity markets, the capital markets at large. You're talking about Uber here. As you mentioned, they don't make a profit. You just got done with your prior segment talking about this idea of Disney, or a company that's had a lot of success in content, versus Netflix, who shows a GAAP net income profit, but if you actually look at it from a free cash flow perspective, is losing over $3 billion a year. So why are these random things that seem random to somewhat rational people going on right now? Well, when people are buying the 10-year Treasury at 2.40%, it argues that there's a lot of stupid things going on in the markets. I'll give you a couple other examples, because we touched equities. We talked a little about the U.S. government Treasury markets, but there's venture money flowing into things like home food delivery right now. And there's a bunch of groups like Freshly and Grubhub and HelloFresh that would love to be there. And that's really just feeding the profits of Google, because they acquire their clients via digital search. But like Uber, they make no money in those businesses. The home food delivery can't make any money.
Okay, I see, but you know, if there's to be an element of sanity in all of this, these companies like Uber are clearly not a dividend play. There'll never be a dividend out of that company in my lifetime or yours. But at some point, look, I'm old enough to remember the dot-com boom and bust. That wonderful phrase, you'll probably remember, the path to profitability. At some point, you've got to make money.
Well, in economic history, yes. In today's environment, or like you said, in the dot-com bubble, many people would say no. And let me give you an example of what you highlighted. In '99, at that time, we had more unprofitable IPOs in U.S. equity markets than we'd ever had in the history of the U.S. equity markets. Well, guess what? Today, we are going to capsize that prior peak. And in this era, we are going to produce the most unprofitable IPOs in U.S. stock market history. So what this is indicative of is it is nothing short of a financial euphoria. Does this have to look and feel and taste exactly like '99? No, it does not. And no financial euphoria is identical. For example, the Nifty 50 in 1972 was 50 blue chip American stocks. Technology and conceptually oriented investments got killed 3 years prior, when the Onyx or the go-go era ended and the blue chips got overcapitalized. Okay. So the rhymes are there. The problem is it shows you how willing investors are to seek a questionable return in today's environment.
Uber makes a great company. Uber provides cars, but will it provide a good investment?
I just took an Uber down here to the studio I'm sitting in here in Seattle, Washington, as we speak. As a customer, do I enjoy their service? Yes, because they're terribly underpricing the goods they provide in society, because a bunch of investors are willing to put up the capital to cover those losses. The question is, will the capital markets continue to provide capital to these business models? And the beautiful part of it is, time and time again, capital markets change, the flow of money changes, and people wake up 5 years later deciding to do different things. And if you're not profitable, you have no say over that future.
Cole, good to see you, sir. Let's talk again more on these issues in the
Thank you.
future. It's much appreciated you taking the time.